Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 7th, 2025, and we're diving into the latest earnings report from Restaurant Brands International, one of the world's largest quick-service restaurant companies. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss Restaurant Brands International's performance this quarter, especially given their strategic initiatives and market presence with brands like Tim Hortons, Burger King, and Popeyes.
Revenue and profitability overview. Let's start with the top line. Restaurant Brands International reported total revenues of $2.41 billion for Q2 2025, marking a 15.9% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth was primarily driven by a 5.3% increase in system-wide sales, with significant contributions from international markets, particularly Burger King and Tim Hortons. Despite the revenue increase, the adjusted EPS of 94 cents slightly missed the forecast of 0.97, which was based on a survey of 11 analysts.
How did the company perform in terms of profitability?
Net income for the quarter was $263 million, a decrease from the previous year. This was largely due to increased operating expenses and strategic investments. However, the company maintained a strong adjusted operating income of $668 million, reflecting a 5.7% growth year over year.
Operational efficiencies and future outlook. John, can you elaborate on the operational efficiencies and future outlook for Restaurant Brands International?
Certainly, the company achieved a 5.7% organic growth in adjusted operating income driven by strategic initiatives and operational efficiencies. They also reported a net restaurant growth of 2.9%, which is a positive indicator of their expansion strategy. Looking ahead, RBI has declared a dividend of 62 cents per share and announced a $1 billion share repurchase authorization, reflecting confidence in their financial stability and future prospects.
What does this mean for investors?
For investors, these actions signal a commitment to returning value through dividends and share buybacks, while also focusing on long-term growth through strategic investments and expansion.
Segment performance and strategic initiatives. Let's delve into the performance of RBI's key segments. How did Tim Hortons and Burger King fare this quarter?
Tim Hortons reported a 3.9% growth in system-wide sales, driven by strong performance in Canada. Burger King's Reclaim the Flame initiative is showing positive results, with increased advertising revenues and a focus on franchisee profitability. The plan includes significant investments in advertising and restaurant enhancements.
And what about Popeyes and the international segment?
Popeyes benefited from recent acquisitions, contributing to a 1.6% growth in system-wide sales. The international segment was a standout, with a 9.8% increase in sales, highlighting the success of their global expansion strategy.
CEO insights and strategic vision. John, what insights did CEO Josh Kobza share about the company's strategic vision?
CEO Josh Kobza emphasized the progress made in advancing strategic priorities, particularly in improving sales trends and execution. He highlighted strong franchisee alignment and impactful marketing as key drivers of success. Kobza remains confident in achieving an 8++ organic adjusted operating income growth for 2025, which is a testament to their strategic focus and operational discipline.
How does this align with their long-term goals?
Their long-term goals include sustained comparable sales growth and continued expansion, with a focus on enhancing the guest experience and driving franchisee profitability. This strategic vision is well aligned with their current performance and future growth prospects.
Key takeaways. As we wrap up, let's summarize Restaurant Brands International's performance this quarter. Despite missing the EPS forecast, the company showed strong revenue growth and strategic initiatives that bode well for the future. John, Any final thoughts?
RBI's focus on operational efficiencies, strategic investments, and shareholder returns through dividends and share repurchases positions them well for continued growth. Investors should keep an eye on their international expansion and strategic initiatives like Reclaim the Flame for Burger King.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Restaurant Brands International's performance in the comments below.